Namaste traders. So finally, we got the much needed breakout last week. It was a cautious move, but towards the end of the week, the market finally gave us the much needed pre-Diwali breakout. So sentiment has turned positive. Many charts will now look much better than how they were looking at just 2 weeks back. So, like every weekend, join me. Let's take a look at the Nifty. Let's take a look at the RRG graphs. Let's take a look at all the sectors. And let's figure out how we should strategize for the week ahead with two market holidays. Come, let's analyze the Indian equity markets. Okay, back to the three screens. Gives us a little bit of a more real estate on the charts. Monthly on the left, central is weekly, right daily. Usual next price indicator and the next RSI combination, which helps me to understand these charts much better. With just few more days, 1.5 weeks to go, the monthly chart is already looking very good. But more interesting and more important is the weekly charts. Nifty spot weekly Heikin-Ashi turns bullish. Trend indicator, momentum, state of flow, everything has turned bullish. We have a breakout from this high and it's kind of holding well. So the markers, the cues from the weekly time frame are all positive, which means that we should be looking out for long trades. With that in mind, we come to the daily time frame and we see a brilliant move from the benchmark index. The momentum, the trend, the state of flow, all were turning positive from this area. We had a little bit of a consolidation and then the big move. All the markers over here are also very much positive. And so strategically, one should be looking out for long trades. But there's a question. Should we look out for long trades Monday in terms of a breakout? Or should we wait for some kind of a pullback, a bit of a slowdown consolidation, and then go for the trades? As we will take a look at the various sectoral charts, we will find two different kind of situations. Situation number one, wherein that stock, that sector has participated with the market and it is stretched and it has given us a breakout. Those charts, don't chase the breakout. Wait for a pullback. And then we will find few sectors which have not matched this kind of move over the last couple of weeks. They're looking okay, but they're waiting for that move. And those will give us some signs of fresh breakout, if at all. So we have to keep an eye on those. If they give us a breakout, we'll go for them. And those which have already given us a move, makes sense to just cool off, let them cool off a little bit. With that in mind, with the view on the Nifty and the overall markets is bullish, and we will be looking out for long trades, especially where the risk reward, or should I say, the risk seems to be minimal. Take a look at the broader markets. CNX 500 is looking pretty good, just like the Nifty. Midcap also very much, the monthly, daily. The daily chart is definitely stretched and back to those highs. But it's the CNX small cap which will clearly show you that it is still significantly below the mid-April highs. This is the mid-April high for the small cap. The mid-cap is already back to its mid-April highs, and the Nifty is already trading significantly above its mid-April high. What does it tell us? It tells us that the recent move, the recent 4 to 5 days move, has predominantly been fueled by the larger heavyweight index stocks and of course mid-caps, but it's the small caps which has not performed. It's a tad bit underperformer. And we will see this as we take a look at the RRG graphs. But what is the takeaway? The takeaway is, will the small cap do a catch-up game, or will the small cap probably is going for a correction? That we don't know. But if we take a look at the markers, the weekly as well as the daily chart, it's still okay. And we should stick to a positive view from the small cap and expect that this pack will also give us a rally. So the benchmark Nifty, mostly positive. The broader markets also mostly positive. We will be looking out for long trades. And now we come down to the sectorals. If you follow my end of the week work like this one, do let me know in terms of your comments, and do subscribe if you feel so. But every weekend when I walk through these sectors with RRG graphs, I mark them, I flag them with a green flag or red flag or no flag. Green flags means it's a bullish chart and we should be looking out for longs. Red means look out for shorts, and neutral or no flag means stay away. These are the flags for the week ahead. I'll explain them step by step. But now I will take you to the strike analytics page, wherein we will find relative rotation graphs, which will help us to understand relative strength. Those of you who had joined my recent webinar, which we just concluded a few days back, thank you for your participation. It went really well. Post that, I had a discussion with the team of Strike Analytics, and I'm happy to share with you that they are offering you, aka followers, an extra 10% discount. Whatever price they have at their end, whatever pricing it is at their end, you will always get an extra 10%. Being a follower of relative strength and, of course, the kind of work that I do. Details in the description box. RRG graph, when we come to Strike Analytics, the first thing that we do is we change this only indices long list of 37 indices down to the watch list that I have created of these 50 indices. Then I change the benchmark to Nifty 500. And I like to evaluate this from a weekly perspective. And I'm going to increase the count from 5 weeks to 10 weeks. There's a logic of the 10 weeks. If you remember last week, I had kept it 9. The logic is very simple. Nifty index bottomed out here. Since then, from this bottom, how many weeks has passed? And so my intention, curiosity is during this time period, which are the sectors which are outperforming, which are the sectors which are underperforming, etc. And so this count is 10 bars on the weekly chart, which is 10 weeks. Going back to RRG now, I'm going to sort it in terms of percentage change. And I can see very clearly all the sectors in the last 10 weeks, they have all posted positive gains. Good thing. There are few in the leading, and that's where we are going to start our discussion. In the leading quadrant, the first two names, they are Nifty Auto and Nifty Metal. Starting off with Nifty Auto, significant relative strength. Look at where it is vis-a-vis the axis. Huge relative strength, the sector which enjoys the maximum relative strength at this juncture, but it's slowing down a little bit. The momentum is slowing down. Positive, leading sector. RRG tells us it should be there in your long candidates watch list. Do not go short. Nifty Metal, also pretty good looking RRG. Relative strength is gaining, momentum is also gaining a lot. So both the auto and the metal should be long bias. From the RRG, this is the input. With that in mind, we always cross-check with the actual chart. CNX Auto, fantastic monthly, pretty decent weekly. We know 3 weeks back it hit a lifetime high, and after that it has been consolidating. And recently it has picked up momentum. So we can, before I say we can, view on the sector, positive. Strategy, look for long trades. But be a little picky because you might get charts which are extremely, stretched and extended on the upside. So look for trades where the risk is relative and look for quick long trades. Auto flag green. It's been green for quite some time. CNX Metal, very good looking monthly chart, hits an all-time high this month. Last week all-time high, this week takes a breather with a red HAGB, which is a sign of consolidation. And you can see this consolidation, a short-term diamond kind of a formation. I have signs of higher highs with the momentum indicator slowing down. It is slowing down. It's a sign of slowdown. View bullish. Strategy should be looking for long trades. Should I go for breakouts? Not necessarily. If it cools off and gives me a better pullback, then go for long trades, but it should enjoy a green flag. So auto and metal, both in the positive quadrant. The other two names is the Nifty PSU Bank and the Nifty Consumer Durables. PSU Bank is okay. It has got a bit of a relative strength. It's inching up a little bit. The momentum is there, but nothing great, but still very much positive. Remember, it was in a weakening quadrant. From there, it's done a U-turn and it's gone back to the leading. With that in mind, PSU Bank, if we take a look at the charts, monthly is fine, weekly is extremely fine, and the daily is again where I see a disconnect between the momentum and the trend, and there are signs of short-term choppiness. So it is a strong chart. View is positive. Strategies, we should be looking out for long trades. We are not going to chase these breakouts, but we are going to wait for a little bit of pullback and then the follow-through move. So PSU Bank also enjoys a positive flag. Consumer durables is a little difficult to figure out because it does not enjoy a lot of weightage. It does not enjoy a lot of relative strength at the juncture. It's not too far away from the axis. And off late for the last few weeks, it's been losing the momentum of relative strength. So it is there, but it's not really there. It's not like how auto and metals or even the PSU Bank is positioned. Tricky. Consumer durables, if you remember last week, I think we had made it neutral. We did not flag it off. This week, I have flagged it off green. Why? See, monthly is flattish. Nothing to take away from the monthly. Weekly was weakening, but this week it has bounced back. It's a higher high, higher low on the weekly time frame. The Heikin is also improving a little bit. So is it bearish? No. Is it bullish? No. So weekly is kind of neutral. But the daily has improved into a positive state of flow. And this is why when I combine the weekly neutral and the positive daily, it gives me a short-term positive view for the Nifty consumer. Because the weekly, monthly charts are not that great, I will suggest not to chase breakouts. Again, in this case, a bit of a pullback and a rally is better. Keep an eye on the top 3 to 5 names that makes up the Nifty consumer durables. So consumer durables from a neutral now goes to a green flag. From the leading quadrant, we come down to the weakening quadrant, and over here we have only one name, that's the Nifty Midcap 100. We have discussed this, that the Nifty Midcap is more or less mirroring the Nifty behavior, and we stay bullish over there. Now we come to the lagging quadrant. Over here, the list is still long. Starting off with Nifty Realty. This is a beautiful behavior of the RRG, and the momentum of relative strength is picking up a little bit. It's a weak sector, which is trying to bottom out. If that's the case, we'll take a look at CNX Realty. And yes, we get the similar kind of a view that after this correction, it has created some kind of a bottom formation. On the daily chart, you might see a triple bottom, kind of a triple bottom. And then we've got a very good reversal in the last 2 weeks. If I blow out the daily chart, if I just look at the daily chart only, then definitely we have some signs of bottoming out here. Earlier, we had these 2 legs up. This is the third one. It is a little stretched. It is back to those previous highs. So state of flow has turned positive. Moving back to the 3 time frame, weekly chart has improved. Good looking Heikin. Trend indicators will pick up. So bullish from the daily, no doubt. Bullish and stretched. Improving from the weekly. So both the parameters are predominantly bullish. Add it to your long watch list. Realty gets a green flag, but don't chase breakouts. Wait for a pullback. When you take a look at the CMX Realty constituents, the stocks, you will find that few have led the move. Few are trying to do a catch-up game, especially those who are at the top tier of the weightages. They are moving little late. So focus on those names which can give you a pullback. View strategy bullish. From the Realty, the next one is private bank. Not much of relative strength, gaining a bit of momentum. Private bank needs to be matched with Nifty Bank, which gives you a similar reading. And Nifty Bank also needs to be clubbed with financial services, which also gives you an RRG, which is gaining relative strength momentum, but it's not really absolutely strong. Let's take a look at the price. And in price, you'll get surprisingly the fact that Bank Nifty hits a new life high last week. And I like this fact. And I'm going to repeat this fact. Every weekend, Friday or Saturday or Sunday, when I'm making these videos, I've been sharing this with you for almost a month now, that it's good to see some sector or the other hitting a life high. If it was metal, if it was auto, then next week it was metal. If next week it was metal, then it was finance. It was finance. This week it's Bank Nifty. If it's Bank Nifty, maybe in the next couple of weeks, we'll see the PSU names there. So this is a good sign. I get a good omen of the fact that things are hitting life highs. Stocks, sectors hitting 52-week high, all-time highs is a sign of strength. So we should not ignore that. Bank Nifty, being the most important heavyweight sector of the market, is at an all-time high. So congratulations on that. Monthly improving, weekly improved, daily improved and stretched. View positive, strategy to go long. To chase breakouts, no. To wait for pullbacks like these, yes. If that's the Bank Nifty, private bank will be a mirror image. Same view. Not at an all-time high, but very, very close. CNX Finance, on the other hand, is at an all-time high. Same view. Bullish, stretched bullish charts. Better not to chase, wait for pullbacks and then go for long trades. So finance, Bank Nifty, and private bank. If you remember 2 weeks back, we had removed the neutral and given them a green flag because we were seeing signs of improvement.
Good to see that it played out. So they stay green, we look for long trades.
After the private banks, financials, and Bank Nifty, small cap is there in the weakening, in the lagging quadrant. We have discussed small cap. We understand that it is underperforming and it reflects there. So we'll be careful. Public sector enterprise and energy. Both of them do not have much relative strength. It's actually they're underperformers. And both of them are trying to gain a bit of momentum. Both of them can be fresh breakout candidates. Let's take a look at CNX PSE. Monthly, okay, holding well this month. Weekly, improved with a sign of consolidation. And this consolidation can be seen on the daily time frame again. Some kind of a diamond, kind of a pattern, formation, consolidation right up here. PSE, CNX PSE, mark last week's high. If we get a move above last week's high, it should be the next candidate hitting an all-time high. Should be, ideally, if it picks up momentum. So CNX PSE is view bullish, consolidating, not stretched, fresh breakout candidate, trigger above last week's high. Clean. Energy, weekly, consolidating, state of flow, everything positive. Daily, consolidating, just like the PSE. Stretched, no. Range bound, yes. Breakout candidate, yes. Trigger, weekly high, beats high. So these two, CNX Energy and the public sector enterprise, these two are your breakout candidate. Whether the breakout will come or not, whether the breakout will be successful or not, that only time will tell us. By looking at the charts at the current juncture, we can only say that whether they can give a breakout or not. And both of them can. That's your lagging. Now, coming to the improving quadrant, this is where we have FMCG, pharma, and IT. IT is the second most important sector, but significant underperformance. And it's also not looking that great. It has improved, as you can see, over the last 10 weeks. It has improved relative strength, but still not that great. IT, we had marked red last week, if I remember correctly. Monthly, anyways, is still down. Weekly was down. Last week's move is interesting from a Heikin point of view. It's a bullish Heikin. But it's not really very, very bullish and strong, just like what we saw in Bank Nifty, finance and all that. Not really. It's still bouncing back. Add to the fact that Friday's trade, it was the biggest sectoral loser, and the daily Heikin has turned bearish. Daily trend is angling down, and the momentum is also just losing hope. When I club up this improving reading from the weekly and improved, but all of a sudden coming down reading from the daily does not give me confidence. It does not give me confidence, and I've taken the red flag out and I've kept it neutral because the weekly is improving, the daily is deteriorating. I can't make any strong sense whether this will happen or this might happen. And so I'm keeping it neutral. IT. Next is pharma. Now, pharma right over here, neither has it is essentially what? A positive momentum is there of the relative strength. Relative strength is not there, but it's too close to the axis. This doesn't make too much sense. It was doing good, but all of a sudden it lost its momentum. Is it range bound? Let's take a look. Pharma. When we take a look at the CNX Pharma, we do see a inside bar on the monthly. And we clearly see on the weekly a fall and a rise and a fall and again a rise. It's gone into a coil and it's range bound. That's why it does not have a huge amount of underperformance as well as outperformance. It's very close to the axis. Short term improved. Short term readings have improved. If I look at the weekly closely, it's an improved week, definitely improved week from a Heikin point of view. If we take a daily, of course, daily has improved. It's still range bound, so this can again be a breakout candidate. It does not have a very big coil, but if the weekly breaks out, it can give us a good move, and that's why I have marked pharma green. Now, pharma, you need to be a little picky, choosy, because I don't think every stock is going to move. But let's see if we get the weekly breakout. If we get the weekly breakout next week, it's a good thing. And then finally, FMCG. Underperformance, yes. Losing relative strength, yes. This is not a good sign. It was doing good, but then it has lost. RRG is okay. It has got momentum behind it because it's in the improving quadrant. All that it needs to do is move left to right, means show relative strength. But if we come to the CNX FMCG, we will see a huge, all of a sudden, big jump up or recovery. There was divergence screaming on the next RSI indicator. We use our indicators in such a manner that it marks those divergences. Can you see those green lines over here? These green lines. So they're marking these divergences. And I'm glad that these positive divergences played out. It has created a huge outside bar. What's my rating from the weekly? Positive volatile. Not positive volatile, improving volatile. I'm sorry. Improving volatile. Daily improved all of a sudden in just matter of 2 days. So a lot has all of a sudden happened. I do not have conviction from either of the time frames. Daily looks still established. And so if the daily cools off, I may expect a move, but the weekly does not give me that confidence. It's been range bound for a long time now. And so I have not marked anything on FMCG. I would like to stay away from FMCG as well as IT. These are the 15 sectors that makes up Nifty 50. Apart from that, there are 4 more sectors which I track separately. Starting off with the capital market, exceptional recovery bounce back. Rarely do you see a bounce back like this from a sectoral chart. Weekly positive, daily positive and stretched. Strategy, view positive. Strategy, look for long trades. Breakout, no. Pullback, long trades, yes. Defense, we had marked it green. Weekly chart consolidating, state of flow positive. Daily chart picking up momentum positive. This is another of your breakout sector, possible breakout. We spoke about energy, possible breakout. We spoke about public sector enterprise, possible breakout. We spoke about pharma can be a breakout, and then defense. This is another one. Digital has those digital names along with IT. So it's like a pull and push, but the weekly charts have moved back to this highs. Weekly charts positive, daily charts positive and stretched, waiting at the right below the top for the breakout. So I'm marking digital positive. Over here, look at the pure digital names and not the IT names, which are a part of Nifty India Digital Index. Last, tourism. Tourism, I think we had marked it red, if I'm not mistaken, last week. Weekly chart is still negative. Daily chart all of a sudden has turned positive. Heikin is positive. Momentum is also turned positive. So I have diverging views, opposing themes that I'm getting from the weekly and the daily. And so why will I want to, bother over here? Also, it's not a very important sector. So I'm kept it neutral. I've got no view on the tourism, IT and FMCG. I'm going to wait for some confirmation and then take a view. Right? So after a move like this, after Bank Nifty hitting an all-time high, it's not a surprise that out of around 19 sectors, you have majority of them green. But they are not all the same. They are green, they are positive. They're positive. We will be looking for long trades, but that does not mean we will chase the breakouts. Those who are stretched, wait for a pullback. Those who are not stretched, like the ones we just discussed, they may give us a breakout. And if they give us a breakout, it's all good for the Nifty for another week or two. But be careful, be picky, be prudent about the choice of trades that you make. Stick to your risk management as much as possible and trade well, right? Thank you. Do let me know your thoughts about these weekly analysis. Till then, take care of yourselves. Goodbye.